Tonight I'm going to just facilitate a conversation which has actually been going on all day in the halls, which is what is the participation that we should be looking for from the ICO, from the token, in the future of blockchain. And so I want to start off with a positive note because there's a lot of issues here about tokens. And I think we should start by talking about what is an appropriate way to use tokens and what are projects that would make sense for that. So David or Jesse, maybe you could just give an example, given both of you have businesses that have had very successful token offerings and can give this sense for this audience of what's possible.
Yeah, so my, my project is called Bloom. We are a decentralized credit and identity system. And we did a token sale in December, sold about $40 million worth of tokens. And there's a lot of talk on utility token versus security token. And one of the hallmarks of a token that is good for a token sale is something that has no expectations of an ROI, so it does not pay dividends. There is no underlying equity or implicit equity, no voting in or governance over the company. And so in the case of Bloom, our token has very discrete use cases in that a Bloom token allows you to generate an identity, which allows you to generate a credit score. And it's used for a precise purpose. You mentioned in your talk earlier, like almost like a Chuck E. Cheese token. It's used for a precise purpose that gives you access to a software or service. And I think that distinction is going to become critical. That along with live actual utility. You can use Bloom tokens right now, and it's been live since the moment the tokens went on sale. And so I think these are critical components for companies looking to do a token sale.
So you implicitly, by the way, said something important there, which is that by the time your tokens were in use, they actually had a use.
Right. The moment the sale finished, you were able to generate a Bloom ID. You're able to invite others. You're able to do certain functions on the network. And we now have over 6,000 out of our 11,000 token holders are actively using them in the past month.
That's great. And by the way, let me make sure people know we want to hear from you guys too. So if people have questions, raise their hand. There is one roving mic, but we'll get it to you. OK, so that's a great example. And David, I know you've got another one too, which I think is going to empower everybody in this room too. Frank, I'm sorry. Brian, and I'll get this right now. Right. Brian, you're going to go.
Yeah, my friend's brother-in-law's name is David Fox, but I'm not.
Yeah, exactly. So. No, Brian is from Orchid Labs. And actually, may I do the advert for you for a second? Sure. So, we're living in a world where everything is very much centralized, and we've come used to the fact that, for example, we trade our data for free cloud services, which I think we're beginning to see the expenses of that with things like Cambridge Analytics and Equifax, et cetera. But somehow we want to get the best of both worlds. And between Jesse enabling us to actually take control of our data and then what Brian is now doing with Orchid Labs to actually enable us to get a decentralized web, we have that potential in our future. But why don't you now share how you use tokens in that?
Well, so you mentioned decentralized web, and what that really means is all the participants in the network provide and purchase services from that network. What's really interesting about what Orchid is doing, I believe, is the only thing we're creating is an open source protocol, and we're trying to market that protocol, but we don't control anything. We don't control tokens. There's nothing central about us at all. We're creating an ecosystem, and I think that is another important feature of a true utility token.
Absolutely.
One in which the organization that created it doesn't get any direct benefit from it. If the token goes up in value and I happen to have a few in my pocket, that's good for me personally. But nothing that a government does to me could possibly get your data to be exposed or information about the network to be exposed.
And so, Brian, just share with the audience, if you will, so the utility of your token, what are some of the examples of things that it's going to enable for participants in the protocol?
So the flagship application that runs on this platform is bandwidth sharing. If you're behind a restrictive firewall or you simply don't want your ISP to see all your data and know every single website you're going to, you can use this network. You pay some small fee. It's micro pennies per gigabyte, I think, is what we calculated it out to be. You pay some small fee, and that is spread out amongst the other people on the network who are helping you get from place to place. Your data is encrypted, and it's modified not to look like a standard web request or whatever it is that you happen to be doing, and you're able to get out from behind restrictive firewalls, so you have access to free speech, even if you're in a country that doesn't normally allow that.
Perfect. So as you can hear, there are some very good cases in point here for where tokens in both these cases are being used for real utility and for purpose that benefits the participants in the network. And I think that's one of the key attributes of where tokens should be used. Let's flip to the other side for a second. Sharon, we work together, so we see each other in the office every day. Sharon comes from a background deep in crypto and has started a company called Commonwealth Crypto, literally incubating in our office and solving the problem of custody on the exchanges, which is a very real problem today. To the extent that you believe there's any use for token, is there a positive view you have, or should we switch to why don't we use them? And I know you're not looking to use them.
Yeah, so we're not, we don't have a token associated with our company or with our project right now. I just want to go to something Jesse said that was really poignant for me. He said, the moment the sale finished, you could use the token on our platform, right? So when Ethan and I, my co-founder, was sitting right there, when we started raising for our startup, we did not have a platform that worked because we wanted to build something pretty ambitious that had to be highly secure. We just could not build it, the two of us. I am, however old I am, I have a mortgage and stuff. I can't just not get paid. So essentially, we had to find some way to raise money, and we were not comfortable with raising money prior to having the product ready. So I think what Jesse said was really interesting. When we were not in that position, when we were raising funds for our startup, and that's why we didn't even consider doing a token actually when we were talking about it. So we were not in the place where we would put out a white paper and take in money without a working system. And so what I think is really interesting in the space that we're working in, we don't consider ourselves a decentralized exchange, but there are decentralized exchanges that are solving the same kind of problem that we're solving, which is the issue of when you trade at a cryptocurrency exchange, the first thing you do at a centralized exchange is take money out of your wallet and put it in the exchange's wallet. Then you do trading inside the exchange's databases, and at the end of whenever you've decided, you can withdraw your coins and take them back to your wallet, which creates risk for you. They may not give you back your coin when you want to withdraw them. Okay, so that's the problem that we're looking at, and a lot of decentralized exchange platforms are looking at. I think one really interesting example of a token that's very interesting to me is the 0x token. So here you have a protocol that's being designed by a team, and all they're doing, the way they're funding themselves to build this open protocol that everyone can use is by creating their own token, right? And so that's, I view that as that's really positive. Someone's building an open platform that other companies are building, actual systems where they monetize things, but they're funding themselves with the token. That said, I've heard people say, the 0x protocol doesn't need its own token. You could also have the 0x protocol without its own token. So this is very controversial. If you think about, is it absolutely necessary to have a specific dedicated 0x token to pay relayers in the 0x protocol, or could you just pay them in Ethereum? So it's a really interesting question, but I can understand, wanting to provide this open service for the community. You have to pay your developers somehow. So how are you going to do that, right? And so this is one interesting case for me, at least in the space that we were playing in.
So what's interesting about this, by the way, and we're starting to get a bit of a bright line here, is this. One question you might ask yourself is, what is it in your platform, your protocol, your community, your network, or your service that actually requires a token? And the acid test there is simple, which is if you didn't have a token, would it still run? And if the answer is no, well, then maybe you're on the right track. But if the answer is yes, which is what we're posing in some cases here, you better be asking yourself pretty hard, why are you issuing a token? And if it's for development purposes, for example, that's a very different thing than if it's for utility purposes. And obviously, if it's for fundamental fundraising, you can hear some people, at least, and we're lucky enough to get the chance to invest behind what Sharon and Ethan and others are building, believe that you actually really should be investing on a risk basis rather than taking the public's money for something that is all potential out there in the future. And so it's a good place to introduce Frank, because Satis is really one of the first digital asset investment banks. And so, Frank, perhaps you could give us a sense of how you think this is going to come into focus, not necessarily with regulation, but just through the commonsensical approach of what obviously needs to be banked in the future versus put into practice as a utility.
Sure. Thanks, Michael. Frank Horgan, co-founder of the Satis Group. If you think of us as a digital asset investment bank, we view these tokens as a new form of capital raising. That's obviously very exciting. If you think about it as a form of, I'd say, liquid venture capital, which probably defines the risk category that it should be placed in. We've been advising for about a year with a core team of 10 people on a number of different projects. Our most recent focus is on security tokens for obvious reasons. We're set up as a FINRA registered broker-dealer with licensed registered reps and supervisors on our team, as well as an in-house general counsel. So if anyone wants to talk about security tokens offline afterwards, or if you have an idea for a project, we're happy to do that. I will say we see, on average, 15 to 20 proposals per week as to, I'd like to do an ICO. I heard you guys can help us. Now it's, I heard you guys can do security tokens and you have a broker-dealer. Can we talk? So that's the premise, but I would say out of those 15 or 20 per week, maybe one project per month we'll actually get our heads around as a team of 10 and decide that it's high enough quality to take it on. So up until very recently, we were focused on both utility and security tokens, and I would say that both Brian and Jesse's projects would obviously be something we would have been happy to advise on, and those certainly, in my opinion, and I'm not an attorney, would fit the definition of utility on a platform. Some of the questions that we ask, though, are as simple as what Sharon just mentioned, which is, do you need a token for this, or why an ICO? We could start with that. It's, why not just a conventional VC raise, or a seed round, or a Series A? Why not an IPO? There's a lot of different mechanisms that you can take to raise capital. Given that we're set up as a broker-dealer, we also find ourselves just in the middle of two parties, one who's looking to raise money, one who's looking to invest in things. So we've also gotten involved in some reverse merger IPOs and SPACs and some other like special instruments where you can raise capital. But by definition, if we're truly saying should there be a token, A, is there an underlying blockchain use case? Was blockchain just bolted onto the project or bolted onto the future business plan, or is it truly being born out of a blockchain project? That's a good start. We look at the use of proceeds pretty closely because that's what investors want to scrutinize, or token buyers want to scrutinize as to where's the money going, what's it being used for. So those are some of the things. I mean, it's not, the Chuck E. Cheese example is a good one, but those tokens don't trade on a secondary exchange, so that's the next problem. We are actually working and partnered with one of the first ATSs that's set up to trade security tokens currently. They're called the Open Finance Network. They're actually doing an ICO pre-sale that we're running right now to expand on that platform. But they've been trading private placements for the last 4 years out in Chicago, Reg D, Reg A+, Reg CF. And that infrastructure is set up now to adapt these digital security tokens. So we're excited about that. So we're kind of taking the approach that we can advise on ICOs from start to finish as a registered broker-dealer and have a place that can both do smart contract issuance and also to list these tokens to trade in a regulated environment. So that seems to be the topic of the day. And we also, as far as stuff that doesn't work, I mean, we did some research in-house last week. I think we found that over 80% of ICOs last year had negative returns or
That's the total list of things that don't work? Was it?
Yeah, that was 80%. I think there were 4 or 5% of the basket that we looked at that are actually, alive and well. So.
And by the way, if you look at the data, I think it's even more fascinating to see the cohorts. So the oldest token offerings, of course, are things like Bitcoin itself and Ethereum. They've done best. And if you go year by year, they've gone further, faster, down to the bottom, to the right. Yeah. So we're in an era of declining returns, which is not a good thing to say. Now, having said that, let's get to some positive things that we could do that would be not difficult. So obviously, I'm lucky enough to have been through IPOs and taken companies public, which is a fun thing to do. That's usually taken 8 to 10 years. But we do things when we IPO companies such as lockups. We also register the people that are coming to build our book with. We know who our customers are. Why aren't we doing these things with tokens? I mean, is that just a matter of time before we're going to regulate in that regard, or should we be self-regulating now? What's the thinking there?
Well, the security tokens, so to date, by definition, have been done under some of those same vehicles. They're not registered, but they're under exemptions like Reg D.
But even for utility, why wouldn't we do it? Is my point.
I think that's a great question. It almost seems like we need a new class or a new bucket to put these in, because that's the other issue. We see a lot of very high quality utility token projects approach us now, and the best advice you can give is to consider going offshore or selling to OUS investors only or accredited investors only. We can't just say, we do security tokens, we'll put this under a Reg D. It just they don't work that way. They need to be liquid. So yeah, it's a good question. We need a reg.
David, Jesse, any thoughts on that? I mean, you're probably dealing with this you've got choices at this. Sorry, Brian and Jesse. Any choices you guys have made that you think, while you look forward now, you would do differently?
I would have joined Jesse's company. He already finished his token sale.
I think all of these points are valid. The regulatory landscape is changing day by day. More and more projects are doing token sales that probably shouldn't be doing token sales. Obviously, the froth and how hot the market is has drawn in the wrong type of people that are looking for speculative returns, treating these as investments over utility tokens. My general advice to virtually everyone would absolutely to do a security token these days. I think utility tokens are valid, but I think they are limited in their use cases and types of projects they would apply to. And as far as I've seen, I essentially agree with the assessments here that the market is shifting towards security tokens, but I do think there is going to be a place in the market for utility tokens to continue to perform, especially as these projects grow and mature. You mentioned 0x. Some of my other favorites ones are like Maker, which as a stable coin, and MKR as a utility token attached to that. And so these projects are live, they have real utility, and people are using them, and I think that's key.
Brian?
Yeah, I would just actually agree directly with Jesse. I think the issue is the number of bad people who are trying to make a quick buck in the market, and that's what's driving all these utility tokens that don't actually have any utility. But there are utility tokens, as we discussed before, in the companies you mentioned, that really do provide great utility, and I think they should remain utility tokens, and I think that we should take a stand on that. I'm not going to say that Orchid is the company that's going to do that, but I'm not going to say it's the company that doesn't do that.
Yeah. Now, my guess is a lot of people here don't know what a utility token is. So let's just get a show of hands. Who actually really understands what utility means when you talk about a utility token? Okay, so a good number of you. But there's still about a third of you who don't. Does anybody want to take a shot at that? I'm happy to do it, but I'd rather you guys got to talk.
Well, as I described before, and as Frank mentioned, I describe these as Chuck E. Cheese coins. For those of you who don't know, Chuck E. Cheese is an organization that throws parties. They have venues and they throw parties. And inside that place, they have lots of vending machines. And the only way you can use the vending machine is if you buy some Chuck E. Cheese coins. And then you can walk in and use these vending machines. And that's a utility token. The only thing you can do with it is play a video game in this place.
Yeah, I would add to that, and it's a good analogy. Tokens have some nuances to them that make them special and different. But one of the things I think that is key right now is if you go on CoinMarketCap and you look at the list of tokens, how many tokens can you buy and actually do something with? How many tokens are live right now that give you access to a product or service or whatever they're promising versus only be able to move it to a wallet and trade it on an exchange? Tokens are not supposed to be currency. They're not supposed to be investments. They are not speculative to increase in value. There are mechanics that will make supply and demand laws change with many of these tokens, but if you look at that token list, the number of tokens that you can buy and actually use is really, really small. I am not proud that Bloom has only 7,000 users right now. For a startup, that would be a very small number, but we are actually in the top 10 dApps by number of users in the last month at just 7,000, which goes to, that's on the list with CryptoKitties, EtherDelta, IDEX, right? So 7,000 users is all it takes to be a top 10 dApp in the last month. That, to me, is a sign that almost all of these tokens are not utility tokens.
Even, by the way, we were talking about it earlier today, talking of CryptoKitties. It's a funny thing to observe this, but if you think about the fact that CryptoKitties has basically been clogging up Ethereum, what does that tell you about the level of usage of tokens today? A little worrying. And with that, Sharon.
So I have a question about Chuck E. Cheese. This is a serious question for all the people who are on the token side of this panel. So at Chuck E. Cheese, I pay for my vending machine use with the Chuck E. Cheese token, but why should I? Why don't I just pay with dollars? Like, why do I have to pay with Chuck E. Cheese coin? Well, because Chuck E. Cheese decided that I have to. I see a very close analogy between this and 0x, right? Like, we decided that this is how we're going to pay for 0x transfers. And so I don't understand the regulatory landscape as well as this side of the panel, but how do you think about a system where you have to, the designer decided that it's Chuck E. Cheese coins, but it could have just been US dollars or something more common?
Well, I think you're absolutely right about this. The reason, of course, they want you to buy Chuck E. Cheese coins is because you can't really sell them back to Chuck E. Cheese. So they kind of guarantee you spent some money that they may or may not have to give you value for. That is not necessarily true. That is not true with utility tokens. With utility tokens, because of exchanges, you can always, presumably, return your tokens into the exchange and get your fiat back if that's what you want. And of course, the service is always available. I also believe that if the service that's being delivered is a fundamental service on top of which other applications can be built, that's a great reason to have a utility token. It allows other applications to use a common currency to get access to that platform. And that's where we're at with Orchid.
By the way, you just highlighted something I do want to point out for the audience too, which is these are all microeconomies, and there's some very basic laws of economics that if you don't see them coming, are going to get you into trouble. So for example, you better have more demand than you have inflation. And we're talking about Chuck E. Cheese tokens. The good news is the Chuck E. Cheese tokens have a physical place to go actually use them.
Yeah.
You aren't going to see that in a lot of these tokens. A lot of the reasons that they're failing is that there is no well-managed microeconomy, and the game theory behind them is actually never established. So there isn't even a basis to value them in the first place, let alone utility to use them, let alone basis for the economy to actually keep them alive. So there's some very fundamental things to think through here, which I can tell you I don't see in 99% of the projects. So do your homework is my first point on that one.
Yeah, I think on that point too, it's the key. I think investors or token buyers, you shouldn't say investor, but token buyers have become more informed, and that's why you're seeing a lot of failed raises. I think it's important to look at who the advisors are on a given project, who's on the management team, how far along is their minimum viable product, and also who are some of the anchor investors. I mean, you guys have the front page of crypto large pools of capital, and if you don't have the right advisors, management team, and anchor investors, as an individual token buyer, I'd be very skeptical of the project. I will stick up for security tokens a little bit. There are ways for security tokens to have utility. The one that we're running now for this Open Finance Network essentially serves as a seat on a trading exchange. So if you were to buy the security token, you can still buy it in a pre-sale at a discount. You have a dividend during the 12-month lockup period, and then ownership of that token allows you a discount as a user of their platform, which is a trading platform. It'd be like if an airline used their frequent flyer miles and turned that into a security token, and as a holder of that token, you could get discounted rates or additional miles on your membership or something along those lines. The roadblock is clearly the liquidity. And for utility tokens to work properly at launch, they need to be immediately liquid. And that's 6 or 12 months slowdown in a security token is a hurdle for these types of projects.
So I'd like to go in a slightly different direction now, and also want to make sure that people raise their hands if they want to bring things up. So I don't really know what a VC is doing on this panel, because there's a good chance that we'll get displaced. At least we should have that discussion. And the reason I'd like to have it is this, is that actually it's fantastic that we do have a financing mechanism now for what is really needed, which is a long-term build-out of the infrastructure for the blockchain. And it'll be fantastic if we can really find good ways for tokens to actually support the build-out of that, and we can pre-finance it, and we can do so in a liquid way. So let me give you guys a chance to take a shot at this. I mean, why do we need VCs?
I don't think VCs are going away anytime soon, so maybe I'm the contrarian in the room. One thing it's not a popular view, but I'll share it. The quality of the founders in tokens really would barely make it into most accelerators, much less raise a traditional Series A or Series B VC round, which is what the level of a lot of these projects are doing token sales at. And I raised $4 million for my last startup. We got it up to about $6 million in revenue, and it took years of grinding and presenting to investors and pitching angel investors. And I didn't come from a good network of VCs. I grew up in Florida, but I went to Stanford, which has a lot of access to capital in Silicon Valley, and the ease for these projects to raise in tokens and the experience that the founders need to generate a lot of cash in token sales just does not match the quality that VCs look for on average. And I think the markets are going to balance themselves. And I think VCs should stick to their ways, because I still see tremendous potential in the VC side of things.
But don't you think VCs are far too often not taking the risk they need to actually really help get infrastructure built long before it's really going to obviously pay off?
Yeah, kind of to add on Frank's point, it's risk is part of it, but part of it's diligence. Some people think that that these projects are massive ideas. They are massive ideas, changing the way the internet works, the way finance works. But the founders behind them, all too often don't have the right advisors, don't have the right experience. And so I absolutely think it makes sense to take calculated risks on betting on future projects. Things like Kickstarter and crowdfunding campaigns and token sales are excellent means to do that, but I am steadfast that the market needs to learn how to diligence projects and recognize that ideas on the surface aren't valuable alone. It needs to be coupled with a really competent team, the type of diligence that Frank was mentioning, good supporters, good backers, and good track record.
Okay, so I want to say a couple of things. So first of all, I don't think VCs are going to go away either, but I'm also funded by Michael and I sit in his office. So you have to take my view with a grain of salt. I work with these guys. They're awesome. They're amazing. They helped us so much. So I would say one reason why VCs will not go away is if you take two people like me and Ethan, we're both technical founders. Neither of us has ever started a startup before. Ethan has worked at a startup. I never even worked at a startup after 1999, where I worked at a startup that crashed in 2001. But you take people like us who are very technical, or you could take people that are very strong in financial services or something, but they're not entrepreneurs. And you can turn people like us into entrepreneurs by getting us the right advisors and the right mentors and just sort of surrounding us with people that we would never meet otherwise, because our networks are all engineers, essentially. So I would say that that's one of the reasons that I don't think VCs and incubators and all those things are going to go away, because if you want to start something, you need access to people who are going to help you think about all parts of your business, and it's potentially like people are investing in you because you know a lot about cryptography, but not because you know a lot about how to do the right kind of, contracts and revenue sharing arrangements with partner companies, right? Because this is something that we have never done before, and we're learning this through our advisors and through our relationships with the VCs. I want to say something a little contrarian as the only woman on this panel. I think that there's one really, really interesting aspect of maybe token sales that I never really thought of until just a second when I was sitting here, which is there's a lot of barriers to raising money. A lot of it is like credentials. So I have lots of degrees and awards and stuff, so that made it easier for us. But if you don't, and you're just a brilliant person, and maybe you're not in the particular set of people that people like to invest in, that looks a certain way and talks a certain way and lives in a certain place in the world, this is a really nice way to sort of get access to capital for your ideas. So I think that, I don't know how we go from the Wild West and ICOs, and then there's the ICO scammers that none of us want them in our ecosystem because they're just making it look bad for all of us. But it would be nice if there was a clean way to do these types of raises where you weren't taking on personal risk and regulatory risk, and you weren't worried that someone's going to show up your door with handcuffs because you did your ICO in the wrong way, right? That would give access to people that are not the people you expect, that allow them to kind of get started on projects and build companies. And I think that piece would be really nice. That said, if you do have access to VCs and you are able to get this kind of backing behind you, it's extremely valuable, at least when you're starting something and you don't have a fully rounded team, that you have to build that team as part of starting your company.
By the way, here's to more diversity in blockchain, and thanks to the Women in Blockchain team for showing up tonight too.
Yeah,
Thank you
here,
very
here.
much. Frank,
If I might
sorry.
toss
Brian, go
one
ahead.
thing in there, yeah.
Go ahead.
VCs traditionally have taken a piece of your company, and then they're in a position of control over your company, and they can make it do things that you disagree with, which sometimes is good and sometimes is bad. I think that VCs are necessary, and I think that they should be here and should be here for a long time. But I think that their model of remuneration, the best way they're going to get return on their investment, is going to be a little bit less of control and a little bit more of adding the value that Sharon was talking about and that these people are talking about, not just the due diligence for the kind of outside investor, making sure they're investing in the right thing, but also helping companies in ways that they traditionally haven't done as much of.
Yeah,
So
in
not
the
just
building
relationships,
phase.
yeah.
Yeah, absolutely. Couldn't agree more.
Yeah, I would just add to that too, and we've embraced VCs. Some of the VCs have been pretty forward thinking in the space. Our team ran 2 security token offerings last year for VCs. So one was Blockchain Capital. They did the first security token offering in the market, and we also did one for Science, which is Mike Jones out in LA. And both of those essentially are fund tokens that allow individual high net worth investors to invest in these VC funds and essentially participate in the returns of a traditional VC fund that otherwise that level investor probably would not have had access to outside of just the list of LPs. So that made it sort of like a liquid venture fund. So we did 2 of those. They both are considered 40 Act funds, which fit under like a pooled investment vehicle that have some limitations around how many people can invest and things like that. But the controversy around those a year ago was they had nowhere to list or trade, and now they do.
Right.
So that's I think we'll start to see more of those. We actually just signed another one in New York last week. And most of the portfolio companies in those sleeves are all blockchain related. So the hope is that they'll eventually do ICOs within the portfolio.
Great. And Frank, do you see a day where there will be a different kind of funding, the way we're hearing sort of the potential for that maybe you guys put in place that actually does have the right kind of diligence associated with it, that takes a piece of what today is VC?
In more of an equity structure?
Yeah.
A lot of people are asking for that.
Yeah.
Yeah.
Yeah. We certainly think it's important to think about it.
Yeah.
Okay, what about some questions from the audience? Anybody want to ask this esteemed panel here?
So you guys talked a lot about utility tokens needing to be actually used for something useful on the platform. I'm curious if it's important that the utility token buy a fixed amount of utility on the platform versus having sort of a floating rate of amount of utility it buys, so that it's, whether it needs to have some kind of grounding of value in the amount of utility it buys, or if it can have this sort of floating exchange rate where it can increase ad infinitum.
In my world, the utility token is used to buy services in a marketplace. And marketplace means that people charge what they want to charge. They'll charge what the market will bear. So we expect the market rates to be different for different services that are offered, and also just over time. The way we've looked at it is we actually think that the cost per gigabyte moved will continue to go down, but because there's a fixed number of tokens and some other velocity effects in the network, that the value of each individual token will go up. So,
Gentleman at the back.
Hello, I'm Dr. Nesh Sonwalkar. I've started a company called Power to Peer. So my question is again, to be or not to be token, right? So this is a resilient microgrid based on the solar power system. So it is normally a utility, right? So it would consider to be a utility token. But when we go to the various law firms, they say, oh, no, you should not be utility token. It's better for you to go to security token. So what we are trying to do is create a microgrid which will put into each city, which will go up to like 1 megawatt of almost like a backup system for the main utility. So when the main utilities are down, this resilient system is going to provide the power. So now this is decentralized. So in the local level, I can transact peer-to-peer using blockchain and smart contract with my neighbors. And so if the main utility is gone, then my neighbors are still having power. So for that, I think utility token, in my view, is the best way to go. But what are the pros and cons here? Because they can use that token to buy and sell the power. But at the same time, people are saying, well, there is some kind of issue there because you will also be considered as soon as the value of the token goes up, then it becomes into speculative regime. Go ahead.
Jesse and I would like to know, does that service exist now, or do you need the token in order to raise money to build a service?
So we are going to get the money to build the service.
Okay, so
We have a prototype ready, but in order for us to go to 26 or to 30 cities, we will need the funding for creating that.
So Nishik, by the way, before I forget, because standing right behind you is Jennifer, who gave an excellent talk about this from our sponsor, Wilma. I recommend you guys talk because she's very forward-thinking about...
She's the best to talk to.
Yes, exactly, about this.
Great.
Not me.
Who's next? Gentleman at the back with the red sweater.
Thank you. So I'm also doing an ICO later this year that is a utility token. I'm focusing on healthcare with medical expenses. And a big question I want to ask you is that with 7,000 transactions causing a deficit in Ethereum, I'm really worried about that because I'm sure 7,000 people are going to be using healthcare transactions, like at least. So my question is, what do you think of the idea of expanding the development platforms of blockchain beyond the ERC-20? And funding projects like that so that we can kind of stabilize the market more to allow for services to come in. Because at the end of the day, I don't think things are just going to be speculative based. I think we need to focus on use based. We have to go less on speculation. We need to go on function. And that's why, for example, like a VC is going to always exist, because I believe like with a VC, you can fund projects that are not just purely on like only making money for the sake of making money. They can be used as a service and then be valued as such. So an ICO can now function without the speculation of getting only investors, but actual people who want to use the token as well. Thank you.
I think the first part of your question was about scalability, and it's 7,000 transactions going to clog up the network. Today it does. There's a lot of extremely promising work with state channels, sharding, scaling, Lightning networks, Raiden, and a whole array of proof of stake related improvements that are coming. I have absolute faith in the Ethereum Foundation, and they're making great strides in that. So I do not think this will be a challenge in the future. But I wasn't quite sure of the second part of the question. If somebody else wants to take that.
No, I want to take the first part. I agree. The ERC20 tokens, the way they work today, that's not going to be the way they're going to work forever. We had like several panels on scaling and smart contract structures today, and some of our, we've been talking about this stuff all day, and I think kind of the consensus in the two panels that I were, the two roundtables that I were in, was basically like, we have, on one hand, we have kind of like the Bitcoin script and scalability, and doesn't provide enough functionality to kind of launch tokens if your life isn't about, blockchain infrastructure like mine is. Or you have the Ethereum platform, which with the ERC20 tokens really just doesn't scale. So there's clearly going to be something that has to happen that allows it to scale. And so I think that was like kind of consensus in the room. That's the second half of the question someone else should take.
Well, let's keep going, because there's a question here from Arnie.
Hello. My question is you mentioned 0x. And the token sales right now, 0x, it was divided up to like anyone could participate based off a whitelist. And now the token sales, like Orchid Protocol, these venture capitalists are getting such greater deals than the average investor. I was wondering if you could share some thoughts on that.
That's okay.
I think transparency on discounts is important. I think if a token is going to do a pre-sale, that should be disclosed. I think public disclosures, risk documents are paramount to the space getting cleaned up. And so if funds are going to be used to give returns to an earlier contributor, I think it's just important that that's disclosed to the public so they know what they're buying.
Yeah, I could.
I will. Sorry, I just want to say, in most cases, the funds raised in the ICO do not go back to the initial seed investor. I mean, they hold tokens and they can sell tokens on the marketplace. So they did get a discount, and they took a much higher risk to get that discount.
Yeah, I was just going to add the same thing. They take they get a discount, but they come in with a larger investment, and then typically have a longer lockup and take on more risk. But it's also, I think about some of these ICOs in 3 different tiers. The first tier are ones that never have a public sale. Some of the research that we've done has shown that if you don't raise 2/3 of your total cap in the pre-sale, the deal's not likely to be successful in the aftermarket. So there's probably a 30-40% majority of deals are never announced publicly. The next tier are the ones that we feel need the highest quality advisors and management teams, which is where we try to traffic. And then below that, it's the Wild West.
I'm struggling with the general nature of the conversation. I would have thought you have to start with a startup company is trying to solve a problem. And they need to raise capital, maybe, but it depends on the problem that they're trying to solve. The nature in which they're going to do this, it's totally dependent on each individual case of a startup company. So can you help me? Why are we talking about this in a very general, abstract sense?
I think Sharon's the perfect person to talk about this.
Okay, I can tell you why. You want to hear the story of why we raise capital, or how we think about raising capital?
Why the conversation is, generally speaking, what is the best way of tokenizing, and why is it a general question like this instead of it depends on every single problem that you're trying to solve?
Well, let me frame it. First of all, I think you're saying something extremely important, which everybody in the room, I'm sure, would agree with too, which is, why are you raising money at all unless you've got a really valuable problem to solve that is worthy of that investment? I think everybody would agree with that.
Yeah, that's the first point. But if you're raising money, surely you're raising money for different problems. That means you have to raise money depending on the problem you're trying to solve. Sometimes the IPO, sometimes the ICO. The tokenization depends on what you're trying to do, on what timeline, et cetera, et cetera. Why talk about it generally the way we're doing it?
Anybody want to tackle that?
Well, there are no rules yet.
Yeah, regulation is the issue. So the SEC is saying one thing, and I mean, we just heard a fantastic talk about this. Some people are saying this is a commodity, and some people are saying it's a security, and other people are saying no, it's a utility. And so there's a wide range of possibilities for this thing. I do think it is on an individual basis.
Yeah, can I add to that? Yeah, so I think that, yeah, that's exactly the reason. I think so. For us, we have some appetite for regulatory risk. Right now, the regulatory situation is extremely complicated, and we were thinking in July it's gotten even more complicated in this time, and I think that that's the question to think about when you're thinking about this. It's not what problem you want to solve. If we had well-defined rules on how to do an ICO in a correct way, where you knew you were taking on no risk, that you were taking on no regulatory risk, you didn't break some rule that you didn't know was there, then we would be in a very different space. Where the space we're in right now, there are these rules we don't necessarily understand. We have to use a lot of the, you just have to spend a lot of money on lawyers to do research to figure out even what the rules are. We don't know what they are. So I think that is the general question, like whether are you comfortable with working in a space where you don't know exactly what the rules are, or are you not comfortable working in a space where you don't know where the rules are? For me, I'm not, right? So that's, everyone's got their own decision, and I think that's more of like a personal decision than like what specific problem I'm trying to solve. Because if I broke the rules for this problem, I broke the rules for that problem, I still broke the rules, I'm still in trouble.
So let's try to do 2 more questions. We have one way over here.
Any woman asking questions?
Yeah,
I get some
absolutely.
diversity.
Let's get some more. We've got one over there. Here we go.
So what do you think about all those tokens being now delisted? I just saw the news, so maybe someone can.
Frank?
Yeah, I mean, that's what we were getting back to earlier. That's I think the first target for in the regulatory landscape right now is to look at the exchanges and where are these things trading, instead of going after every individual token that's gone out. It makes sense. That's where the bottleneck is, and it's probably the easiest place to do a clean sweep. I mean, most of these projects, I continue some research. They just haven't done what they promised to do. So I would just throw it out there that a lot of them probably deserve to be delisted, or that the exchange that they were on was doing something, or its participants were doing something that they shouldn't have been doing, and that would result in them being shut down or tokens getting delisted.
So there are almost 1 billion people without electricity in the world today. So with the cost of mining Bitcoin, Ethereum, and other coins increasing significantly, how long this can sustain? Because at some point of time, it's going to be more expensive to mine, and the whole system might collapse. So what's your thoughts on that?
So we had a whole discussion today on scalability, but
It's mining is, fundamentally a market, and so it's a supply and demand market. It's an indirect one, but ultimately the cost of mining approaches the cost to acquire the mining equipment and pay for the electricity. And so centralization is more of a concern with mining over the cost, because the cost will balance out on a market, in my opinion. I have a quick plug real quick.
yeah.
I am actively trying to promote more women getting involved in the blockchain and crypto community. I'm working with a number of women in Silicon Valley and in the areas. And if there are any women here, I know there's a women in crypto group here. If there are any women here that are looking to do a token sale or need initial investment capital for a token sale, I am actively trying to push that and promote that as hard as I possibly can. And so that's my plug.
talking about
Right on.
One last question I want to take from the lady in the front here.
Hello, thank you, Jesse. I was just wondering, you're all very smart folk. Where do you get a lot of your research and insights from? Where do you go to find stuff out?
Just quick answers down the line.
She works with Mason.
For me, my most trusted source is I view my web of information on a handful of very reliable people, and so I have a very short list of reliable people, advisors, and friends, essentially, that I collect information from. And so ultimately, it's in person through conversations with other people. Online media is extremely challenging to churn through.
Yeah, I try to read academic papers, but like Jesse, I kind of rely on Ethereum information from my co-founder who was part of the Ethereum core team. You know, it's stuff like that.
So on the business side, we rely on our advisors. On the technical side, I'm also a computer science professor, so I read and write research papers. I also have access to awesome students that I work with. So for example, like 2 weeks ago, we came out with this vulnerability that we found in Ethereum that we got by reverse engineering the Ethereum peer-to-peer network. The reason that we understood how the Ethereum peer-to-peer network works was because one of my students, Yuval Marcus, who's brilliant, sat there and reverse engineered it for 2 summers. And so I get access to like these amazing, awesome young researchers that I get to work with that give me a lot of information about how things work really in the guts of the protocols.
So with that, I'm going to do something which we need to do more of in this world, which is not a selfie. I'm just going to ask you all to stand up. We're going to see what 300 people looks like in Boston supporting this. And we'll take a quick picture here. We'll start with our panelists. Thank you very much.